Of 5, the year is 2025. Behind the headlines and beneath the buzz of everyday distractions, a quiet, monumental shift has occurred, one that threatens to unravel the global financial order we've taken for granted for half a century. The agreement that has underpinned global energy trade, the very foundation of U.S. monetary supremacy, has just expired. And if you're not paying attention, the consequences will soon be impossible to ignore. Your savings, your paycheck, and the entire fabric of your daily life will begin to unravel before your eyes. For over 50 years, a hidden mechanism maintained America's unrivaled economic power, the petrodollar system. Every barrel of oil sold anywhere on Earth was priced exclusively in U.S. dollars. This simple fact created artificial global demand for American currency, an insatiable need that secured the dollar's dominance, and by extension, America's position as the world's preeminent superpower. Remarkably, this status was maintained while the nation outsourced production, accumulated colossal debts, and ran persistent trade deficits. But now, this 50-year-old system lies shattered, almost invisible to the general populace. The mainstream media barely whispers about it. Politicians offer no warnings. If they did, the truth would be undeniable. The America you grew up in is slipping away. To truly grasp this tectonic upheaval, we must trace the origin of the petrodollar and the fragile empire it built. Our story begins not in 2025, but over half a century earlier, on a pivotal day that transformed the global monetary landscape forever. On August 15, 1971, President Richard Nixon addressed the nation in a somber televised announcement. Under immense pressure, he declared what would become known as the Nixon shock, the temporary suspension of the dollar's convertibility into gold. In essence, the dollar, long trusted as the bedrock of global finance, was no longer anchored to a tangible asset. It became fiat currency, a piece of paper backed by nothing but the full faith and credit of the United States government. This was no small decision. For decades, the post-World War II Bretton Woods system had guaranteed that the dollar's value was fixed to gold, providing confidence to global markets. More than just a currency, the dollar was a promise, and that promise was now broken. The immediate question was clear. Without gold, why would any foreign government continue to accept dollars? Why would banks hold them in reserves? Why would global trade routes rely on a currency stripped of tangible backing? The answer came 3 years later, under the orchestration of Henry Kissinger. In 1974, Kissinger brokered a masterstroke of geopolitical and economic strategy, a pact with Saudi Arabia that would sustain the dollar's dominance through a new mechanism. The Saudis, controlling the world's largest oil reserves, agreed to price oil exclusively in U.S. dollars. What did they get in return? The promise of American military protection, arms sales, security guarantees against their regional rivals, specifically Iran and Iraq, whose own ambitions threatened the fragile status quo. Through this arrangement, the Saudis ensured their regime's survival, and the United States cemented a global currency demand unlike any before in history. Yet this was only the beginning. That bilateral agreement expanded quickly into a multilateral pact through the Organization of Petroleum Exporting Countries, OPEC. Venezuela, Nigeria, the United Arab Emirates, Kuwait, all OPEC's major oil producers fell in line, pricing their oil in dollars. This oil for dollars feedback loop created an unprecedented form of artificial demand. Nations needing energy needed dollars, plain and simple. Imagine the implications. Countries like Japan or Germany, lacking domestic oil supplies but reliant on industrial exports, had no choice but to acquire vast quantities of U.S. currency for their energy needs. China, in its rapid industrial ascent, joined the same club. This artificial demand for dollars was so immense, it allowed the United States to run unlimited trade deficits and print money without immediate repercussions, a privilege no empire had ever enjoyed so lavishly. This mechanism effectively exported inflation. America churned out paper notes like a never-ending press of promises, while the rest of the world absorbed the consequences. Goods flowed in, inflation flowed out, and America enjoyed unmatched economic leverage. The petrodollar wasn't merely an economic policy. It was the linchpin of American geopolitical influence, arguably more potent than all its military might or technological innovation combined. For 50 years, the dollar reigned supreme, not because of its intrinsic strength or gold backing, but because every nation craved energy, and every energy transaction required dollars. Central banks around the world hoarded U.S. Treasury bonds as reserves. America borrowed money at artificially low interest rates while exporting economic instability abroad. However, every empire has its expiration date, and every artificial system eventually unravels. What the public doesn't realize is that the petrodollar agreement came with a ticking clock. In 2023, Saudi Arabia quietly announced its decision. The old system was no longer sustainable, and they would not renew the petrodollar agreement. This seismic announcement barely made a ripple in headlines. It was neither shouted from the mountaintops nor debated in mainstream media. But behind the scenes, in the corridors where central bankers and governments truly decide the course of economic history, this revelation sparked alarm. Once the foundation of a currency system based on collective confidence cracks, the fall accelerates with a ruthless inevitability. Saudi Arabia isn't acting impulsively. Their moves have been calculated for years. Diversifying alliances, courting China, Russia, and India, and positioning themselves within new economic blocs designed to diminish dollar influence, the BRICS alliance being chief among them. Accepting alternative currencies like China's yuan, the yuan internationalization pushed by Beijing for decades, embracing Indian rupees, or even contemplating gold-backed settlements, all part of a strategy to dismantle the dollar's monopoly. This diplomatic and economic pivot from the Desert Kingdom signals not just a regional shift, it signals an epochal transformation in the architecture of global finance. The petrodollar is dead. And with it, the myth of an invincible dollar empire begins to fade. But not everyone is caught unaware. The smart money has already moved. They're quietly amassing gold, acquiring farmland, the timeless symbols of tangible wealth, and investing in foreign assets immune to American monetary chaos. They understand a timeless truth etched in the histories of empires long gone. Money holds value only insofar as trust endures. And right now, that trust is breaking, fracturing before our eyes. The story of the petrodollar, its rise and fall, is not merely about economics or geopolitics. It is a story about power, trust, and the intangible strings that knit societies together. It challenges us to reconsider the very nature of value in a world flush with paper and promises, but vulnerable to the fragility of belief. T-I-1-E-B-F-P, T-1-E-5-C. The unraveling of the petrodollar system sends ripples through every corner of the global economy, but nowhere are the consequences more immediate and personal than within the borders of the United States itself. Behind the gleaming skyscrapers of Wall Street and the familiar hum of suburban life, the foundations are shaking. The system that allowed America to consume with abandon, to spend without restraint, and to project power worldwide is crumbling. The era of effortless financial supremacy is closing. This shift exposes a profound paradox buried in the American economic narrative. For decades, the nation lived off a borrowed future, sustained by a currency whose strength depended less on productive capacity and more on geopolitical muscle and financial illusion. The steady inflow of dollars from oil sales masked deeper structural weaknesses, a hollowing out of manufacturing, widening income inequality, and a debt-fueled consumer society living beyond its means. As the petrodollar fades, the very concept of trust, once the unspoken contract between citizens, investors, and governments, is being called into question. When the foundation of money is no longer guaranteed by gold, nor underpinned by a global energy monopoly, confidence becomes a fragile commodity. Without that confidence, the intricate web of credit and exchange that sustains modern life threatens to fray. Around the world, central banks and governments are recalibrating their strategies. The long-held reserve status of the U.S. dollar is retreating, replaced by a more multipolar financial order. The yuan's ascent signals not just China's economic rise, but a challenge to decades-old financial hegemony. Russia's push for de-dollarization through gold-backed agreements exposes the vulnerabilities in relying on a single global currency. Emerging markets, once tethered tightly to the dollar, diversify their reserves, hedging against the volatility that lies ahead. But this transition is not a neatly choreographed handover of power. It is a chaotic, high-stakes game of geopolitical brinkmanship. The U.S., aware of the existential threat, wields every tool within its reach. From sanctions to strategic military maneuvers, from manipulating financial systems to covert diplomacy. What we are witnessing is not merely an economic shift, but the unraveling of an empire's narrative, a contest for the future currency of influence. The psychological impact is profound. For ordinary Americans, rising inflation, stagnant wages, and a shrinking middle class feel like disconnected complaints, but they are symptoms of a deeper systemic decay. The dollar's weakening purchasing power erodes savings and destabilizes everyday life. Retirement plans dim. Student loan debts loom larger. Social safety nets strain under the weight of fiscal austerity. Yet the fallout extends far beyond economics. It cuts to the core of identity, sovereignty, and global trust. The dollar was more than money. It was a symbol of American leadership and global order. Its fall risks a redefinition of power itself, where value is no longer dictated by print presses and military might, but by complex alliances, resource control, and the resilience of emerging economies. As billions watch anxiously, a crucial question looms. Can the United States reinvent the narrative of trust and value in a post-petrodollar world? Or will this rupture herald a deeper fracture, one that accelerates the decline of the old world and ushers in an uncertain, turbulent financial epoch? Within this unfolding drama, hidden forces stir. Networks of power, financial elites, technocrats, global policymakers, race to safeguard influence in shadows. Meanwhile, a growing tide of skepticism and unrest swells among populations left behind by the promises of endless growth. The petrodollar's collapse is more than an economic crisis. It is the collapse of a faith system that shaped the modern era. And as the dust settles, a new question emerges, as urgent as it is unsettling. What will become the new anchor for global trust, and whose hands will control it? T1EBFP, T1E5C. The unraveling of the petrodollar system marks not just the fading of a currency regime. It is the dissolution of a carefully engineered web of influence, trust, and coercion that once bound much of the world to a single monetary anchor. What seems like a quietly expiring contract is, in reality, the disintegration of an entire era of global dominance. From Wall Street boardrooms to Riyadh palaces, the aftershocks are reverberating, altering alliances and recalibrating balances of power. This collapse unspools amid shifting geopolitical fault lines, where the old rules no longer apply. For decades, Washington wielded economic leverage with subtlety. Sanctions, dollar clearinghouses, dollar-based debt instruments, tools that shape behavior without firing a shot. The expiration of the petrodollar threatens to render these once reliable instruments ineffective, leaving the United States with a narrowing toolkit to project power. America's traditional advantage in dictating terms to the developing world, particularly energy producers, dims as new currencies rise to prominence in trade settlements. Look to China's Belt and Road Initiative. It was conceived as much as a strategic bid to reshape global trade and finance as it was an infrastructure project. Chinese yuan-denominated loans to over 150 countries create a parallel economic ecosystem, less dependent on the dollar, less susceptible to American sanctions. The yuan's steady climb to becoming a true global reserve currency is no accident but a meticulously planned challenge to the U.S. dollar's hegemony. Alongside India and Russia, China is knitting a financial safety net designed to withstand the shockwaves of the petrodollar's demise, ensuring that energy transactions can be settled outside the purview of Washington's dollar-dominated system. This shift cuts deeper than balance sheets. It strikes at the very fabric of trust upon which currencies rely. Historically, the value of money has been less about intrinsic worth and more about faith in governments, institutions, and often unseen compacts. The petrodollar was a promise, the promise that America, military might and all, would safeguard the stability of global energy markets. Now, as that pact fades, the illusion of that promise shatters. Confidence erodes stone by stone, replaced by anxiety and speculation. For everyday citizens worldwide, this is not an abstract economic event. The unmooring of the petrodollar threatens to inflame inflation, unsettle markets, and undermine purchasing power. The dollar's privileged status insulated Americans from the immediate fallout of ballooning deficits and massive money printing. With that shield gone, the risks of stagflation, or worse, economic contraction, loom large. The fragile social contracts in developed nations, built on decades of economic stability, face unprecedented strain. Consider also the symbolic dimension. The dollar, long the world's undisputed symbol of wealth and power, now bleeds influence. Confidence in U.S. fiscal responsibility wanes as the specter of unchecked deficit spending and political polarization grows. At the same time, the spectacle of alternative power centers rising, whether in Eurasia or the Indian Ocean, forms a narrative of a multipolar world reborn from the ashes of unipolar dominance. But what lessons does history teach us here? Empires, after all, do not fail overnight. The Roman currency debasement, the British sterling crisis, the collapse of the Soviet ruble, all reflect how money is a mirror of power, and when power falters, so does the currency. The accelerating dethronement of the dollar, following the petrodollar's demise, is in many ways America's reckoning, a final test of whether it can reinvent its economy and reestablish global confidence, or descend into financial disarray. There is a broader philosophical reckoning at play. What is value if it is untethered from trust? In a world awash with digital currencies, automated trading algorithms, and intangible assets, the petrodollar's end is a reminder that at the core of all monetary systems lies human belief in a nation's stability, its institutions, and its will to sustain order. Without that, paper wealth is just a fleeting illusion. As the world watches this financial tectonic plate shift, questions arise with urgent intensity. What will replace the petrodollar order? Could a basket of currencies, or a yet unknown digital asset, provide a new global monetary foundation? Or are we entering an era of fragmentation, where regional currencies dominate, increasing volatility and risk? More unsettling still, what happens to America's geopolitical stature if the dollar's primacy collapses simultaneously with a fracturing of its political system? Will internal divisions prevent coherent economic reform? Will rising powers seize the opportunity to redraw alliances and reshape global governance? These are not distant possibilities. They are the dilemmas already unfolding behind closed doors in the corridors of power. The stakes could not be higher, for billions of people depend on the fragile architecture of trust and credit erected over decades. The death of the petrodollar is a portal to a new world, one uncertain, chaotic, but ripe with potential reshaping of power and value. How the United States, and indeed the world, navigates this epochal crisis will define the coming century. What lies beyond the twilight of the petrodollar empire? The answer remains veiled in the chaotic churn of history, waiting to be written. T1EBFP, T1E5C. Yet as the petrodollar's twilight deepens, the question emerges: what forces will fill the vacuum left behind? The dollar's supremacy was never guaranteed by merit or market efficiency, but by a carefully woven tapestry of military might, diplomatic coercion, and financial engineering. Now, in 2025, that tapestry is unraveling thread by thread, exposing raw vulnerabilities and igniting a chaotic scramble for a new order. The responses from the global stage reveal the tectonic fault lines beneath the surface. China, having methodically expanded its economic clout for decades, openly accelerates the internationalization of the yuan. The Belt and Road Initiative, far more than an ambitious infrastructure program, is a deliberate financial strategy to sow yuan-denominated trade corridors across Asia, Africa, and even parts of Europe. It's a slow, deliberate siege on American currency hegemony, using projects, loans, and diplomatic ties as currency weapons. Russia, deeply intertwined with China economically and militarily, has been building parallel institutions to circumvent dollar dependency. The establishment of the Eurasian Economic Union and the expansion of the BRICS New Development Bank are not coincidental. These are the bones of a nascent alternative global financial architecture designed to resist U.S. sanctions and dollar influence. In their eyes, the fall of the petrodollar is a strategic opportunity to erode the West's grip on global leverage. Meanwhile, Europe faces its own dilemma. The euro, conceived as a rival and complement to the dollar, remains encumbered by political fragmentation and economic divergence among its member states. The dream of a unified European currency power is haunted by internal divisions and strategic hesitations. For Brussels, the petrodollar's collapse is both a threat and a tantalizing chance. Could the euro emerge as a counterbalance? Or will Europe's reliance on American security guarantees keep it tethered to a receding empire? Within the United States, the silence from political elites is deafening. Admitting the petrodollar's demise would force a reckoning about the country's economic trajectory, its debt addiction, and geopolitical strategy. Instead, the response is deflection and denial, short-term measures like interest rate hikes, regulatory tweaks, and trade posturing. But these are mere bandages on a deep systemic wound. Behind closed doors, powerful voices in finance and government must confront an unvarnished truth. The dollar's reserve currency status is eroding, and with it, America's unipolar power. The human cost of this shift is where history's lessons haunt us most. When the British pound lost its global primacy in the mid-20th century, the transition was slow but brutal, triggering currency crises, social upheavals, and geopolitical instability across regions bound by that empire's reach. The American experiment, decades later and magnitudes larger, carries risks exponentially higher. A dollar destabilization would ripple through pensions, mortgages, international investments, and the very prices of food and fuel that sustain everyday life. Trust, that fragile ledger of all economies, now hangs precariously between generations. The social contract, the invisible bond that promises stability in exchange for faith, faces unprecedented strain. Younger generations, saddled with stagnating wages and burgeoning debt, look to a future clouded by inflation, currency volatility, and diminished economic opportunity. The confidence that underpins markets begins to erode, replaced by fear and uncertainty. Yet, beneath this looming collapse lies a paradox. Will a new financial order emerge, or will the world descend into greater chaos? History teaches us that transitions of hegemonic power are rarely peaceful. They are marked by conflict, realignments, and sometimes, systemic collapse followed by painful rebirth. There is also a philosophical dimension to this epochal change, a meditation on the nature of value itself. For centuries, money symbolized trust in human cooperation, the expectation of reciprocation in commerce and diplomacy. The petrodollar era was a monumental social contract built on energy scarcity and geopolitical control. As renewable technologies advance and new energy paradigms take shape, the fundamental basis of wealth itself is shifting beneath our feet. Energy scarcity is no longer an immutable fact but a variable subject to innovation and environmental upheaval. The era of oil as king is waning. What does that mean for the currencies, economies, and powers anchored to it? As the sun sets on the petrodollar, shadow wars over financial dominance are intensifying in boardrooms, diplomatic backchannels, and covert operations. The rules of engagement are changing, often in ways invisible to the average citizen, who only feels the tremors through inflation spikes, job insecurity, and market volatility. And yet, amid the chaos, opportunity stirs. New technologies like blockchain and cryptocurrencies promise decentralized systems that challenge state monopolies on money. Some see in them the seeds of a post-dollar world, not controlled by empires, but governed by code and collective consensus. Others warn these innovations could exacerbate inequality and instability. One thing is certain. The next decade will rewrite the rules of global finance and power. The question waiting in the wings is stark and unforgiving. Will the United States and the world navigate this transformation with resilience and vision? Or will the collapse of the petrodollar precipitate a cascade of crises that redefine civilization's financial bedrock forever? The clock is ticking. The age of dollar dominance is over. What comes next will shape the fate of nations, economies, and every individual who depends on the promise of money, a promise now tested like never before. The unraveling of the petrodollar was never destined to be swift or dramatic. It is a slow-burning transformation, the kind that undermines confidence in quiet, almost imperceptible ways before the full collapse becomes undeniable. In the immediate aftermath of Saudi Arabia's withdrawal from the petrodollar pact, a new era of currency competition began to unfold, a contest not just between nations, but between fundamentally different visions of economic order and power. Enter the multipolar world, where the era of U.S. dollar hegemony gives way to a fractured mosaic of rival currencies and competing alliances. China's yuan, no longer a distant challenger, has grown into a formidable global player. Beijing's long-term project of internationalizing the yuan has seen gradual, but steady, success, fueled by strategic economic diplomacy and a willingness to underwrite trade agreements with alternative currency settlements. Through initiatives like the Belt and Road, China has woven a vast network of interdependent economies that accept yuan for infrastructure projects, energy deals, and raw materials, effectively creating an oil and beyond system parallel to the old petrodollar empire. Simultaneously, Russia's aggressive pivot toward a gold-backed ruble for energy sales, particularly to European and Asian customers, signals a deliberate challenge to not just the petrodollar, but the entire post-World War II financial construct led by Western powers. The Kremlin's increasing rejection of dollar-denominated trade is more than a political move. It is an act designed to erode Washington's economic leverage. With vast natural resources and energy reserves, Russia can afford to operate outside conventional dollar dependency, and its expanding partnerships with China and India only deepen this new financial reality. The schism does not stop there. India, strategically positioned between East and West, has been cautious yet purposeful, promoting the rupee in international settlements and simultaneously securing crucial energy supplies from these emerging blocs. The traditional dollar zone is now dotted with cracks, as currencies once considered peripheral establish footholds in energy and commodity markets, gradually redrawing maps of influence. But this multipolar monetary order carries profound risks. Without a universally trusted reserve currency, global trade confronts a rising tide of transaction friction, currency volatility, and geopolitical uncertainty. The decades of seamless dollar liquidity, cheap credit, and global financial integration are giving way to a fragmented system reminiscent of the interwar years, when competing gold and currency standards exacerbated economic instability and political tension. Behind this financial realignment lies a deeper fracture, one between trust rooted in military and diplomatic might, and trust rooted in economic interdependence and shared prosperity. The petrodollar was not just a financial contract, but a geopolitical pact underwritten by American power projection. The carriers, bases, and alliances bent toward enforcing dollar supremacy. The new multipolar age, however, is less about outright dominance and more about uneasy coexistence, uneasy alliances, and shifting balances. For ordinary citizens, this transition will feel like a slow erosion of purchasing power and financial security. Inflation, interest rate volatility, and debt crises will become increasingly common, as central banks lose the ability to manage global capital flows with the same effectiveness they once had. Social contract fractures, already inflamed by inequality and disillusionment, may accelerate, fueling political instability in the West and economic turmoil in the developing world. In some ways, this moment echoes the decline of past hegemonic currencies, from the British pound sterling's loss of primacy in the mid-20th century to the late Roman Empire's inflationary collapses. But what makes the petrodollar's demise uniquely perilous is the unprecedented scale of global financial integration it facilitated, and the scale of disruption its absence threatens. Yet amid the chaos, new opportunities arise, financial architectures that could one day redefine what money means beyond geopolitics. Experiments with digital currencies, sovereign-backed stablecoins, and blockchain-based trade platforms represent attempts to reconstruct trust and transparency, this time divorced from military might or state monopolies on currency issuance. But whether these innovations will stabilize or further destabilize global finance remains an open question. As the dollar's invincibility fades, power fragments and trust fractures, we confront a more fundamental question. What sustains value in a world where traditional anchors, gold, military supremacy, even national loyalty, no longer suffice? The coming years will test our collective ability to invent new foundations for economic order or risk descending into cycles of crisis and decline. The great gamble of this era is whether the emerging order will build on multilateral cooperation and shared prosperity, or further entrench rivalry and fragmentation. The stakes are not just financial, they are existential, threatening the social fabric and political stability woven around a system long taken for granted. And if history teaches us anything, it is that the fall of one empire's monetary order invariably sets the stage for upheaval, reinvention, and sometimes profound violence. What will emerge from the ashes of the petrodollar? Will the dollar's final collapse mark the end of American dominance and the rise of a new, more balanced global economy? Or are we destined for a chaotic interregnum, punctuated by currency wars, protectionism, and fragmented alliances? The answer hinges on choices made in shadowed boardrooms and distant capitals, choices that will shape the very meaning of money, power, and trust for generations to come.